Is the US labour market finally on the road to real recovery? Let's ask James Shugg, senior economist at Westpac. Hi, James.
Mark, good morning.
The Beige Book this week said that the labour market is on the mend. Will today's data reinforce that?
I think that today's data are certainly going to look healthy in a headline sense. We're looking for 150,000 private sector jobs to have been created, plus a 90,000 bounce back from the weather impact in the January numbers, and then maybe 20,000 jobs to be lost in the government sector for a 220,000 gain overall. So it's going to look quite good. And your payrolls, though, has been one of the numbers that has really kind of understated the extent of improvement that's going on in the labour market. The question is, how long can this improvement continue?
How much do you reckon?
Well, our view is that the economy actually is going to run out of some steam a little bit later this year, and with it, jobs growth will start to slow again.
So unemployment will start to rise again, because it's come down quite a bit in recent months, hasn't it? The unemployment
yeah, that's
rate.
right. That's right. It came down. Well, 700,000 unemployed people just left the workforce in the last 2 months. That didn't really happen. That's not sustainable. We'll see a bounce back in participation, possibly a 9.3% unemployment rate today, even with that large jobs increase. So we're still concerned about the labour market. We think that the US economy has been driven by a few one-offs that aren't going to be there forever. Then there's still some significant headwinds weighing against the economy.
The data, though, James, has been highlighting strength in the economy, but one cloud on the horizon, which Bernanke referred to this week, rising fuel and food costs. Can America cope with these potential clouds?
Well, they're effectively a tax on consumers. There's less money for them to spend on discretionary items. But there's still an oversupply of housing as well. Households are more inclined to save. A typical recovery from a recession sees the housing sector doing really well, people buying household goods. That's not happening this time. And our sense is, just like there was optimism at the beginning of last year,
it's going to taper off in the second half.
Off, that's right.
How much of a taper are we talking about?
To see QE3 probably before the end of the year.
How much more?
Well, we think in total, quantitative easing could amount to about $1.5 trillion. Sorry, the 2 and 3 together.
Of course.
We've got 600.
Yeah.
You do the math.
I mean, Q3 sends out a big message, doesn't it?
It does, and it's certainly not a consensus view in the US. None of the US economists really believe it, but they're not very good at getting the economy right in the US. There really are these issues that are confronting the US economy that are going to really come to bear later this year.
Got to get a comment on the ECB, James. That's the big story of the last 24 hours. Were you taken by surprise? I mean, most were. Everyone was.
I might bag US economists about the US, but don't come to me about an ECB view. If they tighten next month, I'll be really surprised, really disappointed as well.
Yeah, I mean, is it the first of many? I mean, it's tricky, isn't it? Because it's very much a two-speed recovery. You don't want to derail the peripheries. There's a lot of potential damage to be done.
It's like Merv King from the Bank of England said. You don't want to do these sort of token interest rate moves that really aren't entirely consistent with your broader monetary policy strategy. I kind of feel that that's what a rate rise at this stage would mean from the ECB. Like, we're reasserting our credibility as a tough inflation fighter. Because Weber isn't going to be there, let's put a little interest rate increase in to show that we're still a tough mob.
But it seems as if the ECB does go, I mean, the Bank of England's not going to be too far behind, is it?
Well, Q4 for the Bank of England,
that far?
Apart from the industrial sector, there's a lot of bad numbers coming out on the UK economy at the moment. The GDP, for example, it wasn't just a weather impact. If you look at the employment numbers in the fourth quarter, after growing very strongly in the middle of the year to 300,000, 400,000 jobs, jobs fell 70,000 in the last quarter, even before the bad weather started to hit. Credit to the household sector is very weak. There's a lot of evidence that the UK economy, the services sector PMI came out yesterday. The government cuts are starting to impact. There's guys voting for rate increases, but they may not be quite so adamant about that in a few months' time.
James, thanks a lot. See you later.